Good weekend, all. Ira Epstein with your financial market wrap-up, and this is your weekend edition for April 9th, Friday, 2021. So as we look at the weekend and what's going on, well, if you're in the stock market, you're a pretty happy camper. If you're in the Russell part of it, you're not. But all the others roaring. For those of you that did take my course, the online Bollinger Band, the enhanced version of that, if you will, take a look at that Dow. You should be a happy camper. As we look at the metals, okay, the market came down. It had a big day yesterday. Was that just a flash in the pan? We'll discuss it because this is the weekend edition. And when you go to the metal report, I'll talk about that there. In the currency market, sort of stable today. Bonds and notes gave back a little bit. And in the energy markets, a little bit of a pullback. Wild day in the corn. 20-cent ranges in corn, if you don't know it, that's a big range. You know, this market's normally a nickel to 10 cents, so that's double the size, and that was due to the USDA report, and I think some traders got over rambunctious. How is that? All right, in the monthly area chart, and that's the first chart we'll look at here. I've got the 18-week average, the 18-month moving average of closes, and this is where the market's at on a monthly basis. It's called an area chart, and you can just see the market has stayed over that other than early 2020. That was the only time it got underneath this average, and it has stayed over it, and obviously the market's doing pretty well. Take a look. We're at the 9th. Market's up 3.83%, and I'm very aware. Analysts on all the different TV stations are saying, oh, they want to be in cash for a 10 or 15% pullback. Okay, but it's going up at the rate, my friends, of 2, 3, 4% a month. So by the time you're in your cash and the market keeps going, where are you? That's the problem you have. When you look at the weekly area chart of just closes, now I'm on the week, not the month. Again, you had one pullback under it, November of 2020, and since then, up and away. So the bias of the market has stayed up. Here's your weekly chart. Now on this weekly chart, we had a market that was fighting right in this area. And if it cleared that zone, it could be a move to the upside. Tried to, fell back, came back, and now the market has taken off again. So everyone practically, the open interest in the futures market, for every long there's a short. It's not like the stock market. In addition, what you've got here is because the market closed at practically the high for the week, it means probably 99.95% of the market is underwater. That means the shorts are all losing in this scenario. When you take a look at the swing line, what is it? It's bullish. You've had the pattern of higher lows, higher highs. That's the definition of an uptrend. Breaking it would require a move under 38.43 Where's the resistance? The upper Bollinger Band. You'll see that in a minute as we get here right now. These are the moving averages. None of them are above the market, so it's not a moving average that's the resistance. It's right here. So what this market did is it got ahead of it. It can do that from time to time. We've seen that. But it is going to slip back to the right of it. As sure as I'm on this with you, it's going to do that. I don't know if it's this week, next week. Only 5% of the time will a market stay on a daily chart or a weekly chart over that number. Can it put successive closes over? Yeah, a couple of them. So you've got the market on the run. As I just said, everyone short is basically wrong. Momentum embedded. So I say that as long as you get pullbacks, the trade's going to be looking to buy the market on them until the red line closes back under 79. In the NASDAQ, you got up to a new high, you got up to the upper Bollinger Band, and it's as though somebody rang the bell. You're at the Bollinger Band, stop going up. And that's basically what the market did. It went right up into that area. Trend up, resistance right there, momentum pointing up but getting overbought. In the industrials, embedded reading, that's the most powerful tool I know. It's riding the upper Bollinger Band. It's classic. It gets over the number, pulls back under it, and just keeps riding it. Wherever it ends, it ends. I don't care. As long as that red line stays over 79 on a closing basis, I think the trend stays up. Who knows where the next target is? The Russell's the weak link, and I have so often to tell people that traders come in and they'll go, oh, this is the one I want to buy. It hasn't gone yet. It's going to do that. You know, I've seen that my whole career, and I've been a broker since '69, I think, is when I got registered with the old Commodity Agency Authority, now called the CEA. It's amazing what happens when you get old. You remember all these things. But to make a long story short, I used to think that too. It's the wrong thinking. In a bull market, you want to buy the strongest. There's called rotation, I get it, but you're not getting it. You're just dragging this along. On a downtrend, this could be the leader on the way down, so you got to be careful. There's a reason it's not going up. Is it trending up? Yes. Is it overbought? Yes. It has not been the place to be. In the bonds, well, you got to bounce. And now, if you're a subscriber to my weekend research and my daily research, I've already done my weekend. I've mailed it to everybody. You're getting into resistance zones on the daily charts. The market is still very much in a downtrend. This is a bounce so far and no more than that. That's how I'm viewing it. Get the slow stochastic to close over 21. I'll change my opinion. You don't have that at this point in time. What about the 10-year note? Well, you had a big reversal. That makes sense. I don't like selling a week where you started making a lower and low and then you get a rally, but next week's different. So I'll be looking on this chart as still being bearish, giving a bounce in a market. Down here, when you make a new low and you come back up, especially if you're making new highs for the week, you don't know how high that can carry. There's other tools. You go to the daily chart for that. Is the trend still bearish? It is. Watch what's happening here. This 18-week average is making a run for the 100. Each week that goes by, they're getting closer and closer. They're only a point and a quarter away from each other right now. Be watching that because that would be a bearish crossover in the market. In the dollar index, should be no surprise the market ran into resistance at the upper Bollinger Band. 95% of the time, the market will do that. Did it glue to it? No. Did it ever get the embedded reading? No. That's probably the reason. Is the trend over? No. All you're doing is you're correcting to get out of that overbought area. That's how it at least looks to me. In the eurocurrency, you'd have to get up and over 120.11 for me to think, the market has run out of the downside. Now, admittedly, you are oversold. What do I teach on the first challenge of Bollinger Bands? I think the pros come out. Will they come back in? I don't think so here. You're too oversold. I think they're going to be very patient in waiting on the market. Resistance, if you can clear 120.11, will be wherever the 18-day average comes in. That number is moving at not a big rate. If you take a look, it's only moving about 10 points at a crack. So it's going to be around the 120.50 level, something in that zone. So I don't see a lot of upside happening right here. I think the market can run into a brick wall fairly fast. The Canadian dollar is one of these seasonal trade areas where from the end of March to right up to around mid-April, it has a tendency to rally. In fact, a strong one according to the Moore Research Center. Now, when I look at the weekly chart, I see it. The daily chart, I don't. That's the interesting part. What have we been doing? We've been slipping back. We're still in an overbought area. You could lose that when you reopen on Sunday night. 70.49 is the blue line, and it's on a trajectory to the downside where it's losing right now. If you can see that, 70.49, 72.47, 3-4 points. If it gets under 70, it's no longer in overbought condition, and that could add more fuel. Where do you think the market might find resistance? 80-20, the upper Bollinger Band. Trend up, bias up, corrected and correcting an overbought condition. Japanese yen, I still look at this as a dead cat bounce, right? That's a good term. In other words, a bounce in a market with an embedded reading, still bearish. And like so many of the other markets, you got to watch this. These moving averages are all trying to converge. Will that be a bearish crossover? I don't know. It would be certainly in the face of everything, but remember, this COVID situation has gotten just so terrible that the U.S. has been the powerhouse, and even we had 75,000 reported new COVID cases, and it's scary because it's now going to the younger population. And that's that variant that we have. But imagine what's going on in Europe. They're going to meet this week to decide, do they shut down Europe for another 2 or 3 weeks? And I'm talking Germany, the powerhouse, because of this. And they're just going to do it to the whole region there of Germany. Wow. So you've got that. What about India? What about South America? It's a disaster. I know we're doing better, but we are seeing that come up. Why? Well, let me think about the word summer vacation, all the spring breaks that was on TV and all the people not wearing masks, okay? Bitcoin, higher lows, but now you got a slightly lower high. Okay, a pause. Does it mean anything when you have an embedded reading? No. It means on this chart, still opportunity, still bias to the upside, looking until the red line closes under 79. I'm looking for the market to go up. Next target, if it wants to move to the Bollinger Band, near $70,000. In the differential between Brent and WTI crude, battlegrounds clearly. The 18-week moving average of closes just sort of drifting here. The market's found a home at around 3.5 to 360 difference between the two differentials. You can see here you did lose your momentum though in Brent, and on the weekly chart it's pointing down. Target 18-week average. You'd have to take out 65.65 to break that target. WTI, downside target, right through here. Are the trends down? The swing line trends are, but because the bias is up. What is bias? When you're over the 18-week average of closes, and you are in both of these, the bias is up. I don't see anything fresh for you to do there. In the gasoline market, we have higher lows, but a lower high. Now, what could reinstate the bullish trend here is getting back over the 203.60 level. I'll wait and see if the market does that. You can see you lost your upside momentum. So, take a look at this ad. I think you'll find it helpful. I'm sorry about the phone ringing, but at least it's right at the end of this. If you're as attuned as I am to Bollinger Bands, and you know I'm a student of this, a big one, I'm teaching you everything I've learned in the last 3 to 5 years, which is a lot, all in this short course. Believe me, you'll be done with the course in about an hour, but I think you're going to learn a lot. I'm Ira Epstein. Have a good day. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.